Hi, welcome to the Market Alert for Wednesday, the 24th of July 2019. So the yield curve ominously uninverts. To you and I, that means normalizes as the dollar jumps most in over 4 months. So let's have a look and see what happened with regards to the Dow yesterday. You can see this moving higher on fresh air. No surprise there. As I've said to you, they're going to try and keep the market afloat, moving higher as long as they can, and you can see this yesterday doing exactly this. All it needed was a rumour to move it higher, but prior to this the market had been stuck in a trading range flirting with the 200 bar moving average, and then all of a sudden the market moves higher, and this is on a rumour that there was a potential breakthrough in the trade deal with the US and China. Amazing. Told you, it only needs a rumour when there is no major news or a tweet from Trump. And news today, I think we've got Carney out at some point this week. He won't be far off. It'll be tomorrow. There are a few high impact news items, but these are for the European part of the world. So again, not taking any notice of this. I got it completely wrong yesterday. I misread the Sky News report about Johnson. I thought he'd been elected, but that was at midday yesterday. You can see the market's reaction to this. I mean, they were making an assumption. I interpreted it incorrectly. Hey ho, he ended up being selected anyway with over, I think it was nearly twice as many votes as Hunt. So best of luck. If I was going to make a prediction on the political front, we'll probably have a general election before anything else gets sorted with Brexit, and the market's reaction, frankly, is more or less the same. It's I think the least that's said, the better about it. We'll just have a look at the market's reaction to it. It's a better option. 76% retracement for the pound. We drew in this yesterday, and it's going to be very similar actually if you go and have a look at Bitcoin for yesterday in the daily chart too. The market trading down to the 76% retracement area there at we've got 9,572, back below 10,000 at the moment. The market making lower highs each day as well, so we're certainly a correction in progress for the Bitcoin market. 4 hour, you can see this in more detail. The market trading down from this low, measured up to this high. Great. Once the market trades back up to the 200 bar average and fails, and then starts to make its way down. Just the same as the opposite, of course, when the market breaks through and comes back down and has a look at it here, and then you see prices moving higher as well, and it'll be the same over here as well. See how it's just like a magnet hugging this line, and then eventually the market takes off. In the intraday yesterday was some decent trades, half decent trades. So the market short. So this was a nasty spike back. It's starting to become a little bit spiky, certainly at the weekends, but then moving back up towards the 200 bar moving average before reversing overnight. And at the moment the market already having moved on the first trade of the day to the target, is now struggling a bit to move higher. So again, we're getting these horrible little spikes, which we don't like, but just something to be careful of at the moment. Is still enough volatility to trade it. It's just got to be wary of these little spikes where you get a lot of action all in one bar. And other news, let's have a quick look at Deutsche Bank. I don't know how they're doing this. I don't know whether it's the IMF or the European Central Bank, but they're keeping this market afloat at the moment. And let's see what happens. Their earnings are out on today, the 24th. So let's see what they come out like as well. But at the moment, the levitation is quite remarkable within the Deutsche Bank share price. Let's have a look at the implied volatility. We can see that this has dropped a bit from yesterday, 1136, and this is a 20 bar moving average in both of these, because that's what we've been using for an awful long time, along with the 200 bar. The market remains to the upside at the moment and confirmed by the implied volatility. I was playing with this yesterday and thought, what if I could color code this, and so when we've got problems in the market, it would turn to red when we sort of close above the implied and then below the moving average, and it's starting to work out quite nicely actually. The amber shows one or the other closing, not both together, but certainly showing a very interesting picture indeed. And you can see that we've got a decline in the implied volatility since the Fed came out and said they were going to potentially reduce rates at some point, or Trump had a word in the boardroom. So yeah, and that doesn't take into account of, well, the doubling of the implied volatility as well in the moves, which has always been a very good predictor of a market putting a bottom in, which is what we see down in this area here. So yeah, and the other thing, of course, that we saw this morning was the 10-year, wasn't it? Is no longer inverted. It is normalized, as they say. 41 days of the market trading in an inversion, and now has become normalized. And of course, if you step back and look at the bigger picture, this always happens before the market goes into recession. You will get a situation where the yields become normal. They will trade on average between 1 and 6 months to 1 to 8 months before a recession kicks in, and all of the stats are starting to show that that's where we're heading as well. So forewarned is forearmed, as you've seen before in the alert. So yeah, we've got the 10-year 3-month actually normalizing. It'll be interesting to see if it stays like this. You never know, you may get another spike to the downside yet. But at the moment, after 41 days, we've got a situation where this has normalized and moved back to the green. Okay, that will do it for this one. Again, no major news to move the markets. Markets waiting for Powell. That's a week today. Let's see what happens. Okay, that will do it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.